Korea's current account surplus shrank in the 2016 from the year before, mainly due to a decline in oil prices. It could dip even further as Seoul vowed to narrow its surplus over concerns of being labeled a currency manipulator by Washington. Kim Min-ji has the latest on the nation's trade front.
Korea's current account surplus narrowed last year. According to preliminary data from the Bank of Korea, the country logged a surplus of nearly $98.7 billion. That's down about 7% from a year earlier, but is still the second biggest surplus on record after the $105.9 billion posted in 2015. Last year's figure was driven by a strong goods account surplus, which came to over $120 billion. This was due mainly to improved terms of trade on weak global oil prices. Exports fell 5.7% in 2016 from the year before, while imports were down 7%. However, the service balance remained in the red, posting a record-high deficit of $17.6 billion, pulled down by losses in the transportation and travel balances. The central bank data comes after Korea's Finance Minister Yoo Il-do said Thursday that the country would narrow its current account surplus, apparently out of concern that the U.S. could label it a currency manipulator. One of the conditions Washington uses to gauge unfair currency practices is whether a country's current account surplus is larger than 3% of its GDP. Korea's trade surplus with America also tops $20 billion yearly, which is another condition listed by the U.S. Treasury Department. Seoul is currently on a monitoring list, and its currency practices will be reviewed again by Washington in April. Recently, U.S. President Donald Trump said Japan and China were playing the money market, essentially labeling them as currency manipulators, raising concerns that Korea could be next. Kim Min-ji, Arirang News.